Welcome to Quantum Finance. My name is Parker, and today was CPI day, or also known as inflation day today. So we did have US CPI moving up to 3.7% in September, which is up from 3.67% in August. This is the third straight month with an increase in the year-over-year inflation rate. US core CPI, which excludes food and energy, has moved down to 4.1% year over year, which is the lowest core inflation reading since September of 2021. So this is a chart showing the inflation over the select categories in year over year percent change. As you can see, what was kind of leading inflation over the past year has been vehicle maintenance and repair, rent, food away from home, hospital services, and kind of bringing inflation down. As you can see, fuel oil, used cars, airfare, and natural gas. But if you look in a month over month change, you can see that fuel oil and gasoline have been leading the way in inflation. I'm sure you've noticed the increase in the gasoline prices at the pump. And if you do look at the bottom of the chart, as you can see, bringing down the inflation, we do have apparel, natural gas, and used cars and trucks. So here we have the U.S. rents versus shelter CPI year-over-year percent change. So after 25 consecutive increases, the year-over-year shelter CPI has moved down for 6 straight months from 8.2% in March, which was the highest since 1982, to 7.2% in September. Given its long lag versus real-time data, a continued move lower is expected here, which should lead to a continued decline in core inflation. Here we have the global inflation rates. As you can see, the countries with the least amount of inflation would be, China, the Netherlands, Thailand, Switzerland, Saudi Arabia, Indonesia, Taiwan, Japan, and countries with the most inflation down here with Venezuela, Argentina, Turkey, Poland, Sweden, the UK, Ireland. As you can see, the US sitting here at 3.7%. We also have a chart here that shows the real average weekly earnings since January of 2021. As you can see, the steep decline here in real earnings. Effectively, the typical American family is $7,300 poorer than they were a couple years ago. Here we have a chart showing the national and regional median rent trends. So we did have the median monthly rent price in the U.S. hitting a record of $2,000 a month in September. The median monthly rent prices are up 6% since January and continue to push higher. As of the latest CPI report, shelter inflation is now at 7.2%. So with a $2,052 a month rent, the average person is now paying $24,000 a year in rent, which is 35% of the median pre-tax household income without building any equity in a home. So here we have a chart showing total U.S. debt. If we're talking about inflation and money printing, we have to talk about the U.S. debt. So for those that do keep track, the U.S. debt has just pumped another $40 billion in just one day. We're now at $33.55 trillion in federal debt, just 25 days after it hit a record $33 trillion. So at this current pace, the U.S. would add about $1 trillion in federal debt every 45 days. The U.S. debt is now officially at more than $2 trillion since the debt ceiling crisis ended. But under the new bill, the debt ceiling is effectively uncapped until January of 2025. So now we can take a look at some of the charts. So we'll start here with the S&P 500. As you can see, pretty big red day here in the stock market. Getting a pull down here into these previous highs back here from September, but getting a decent close. As you can see, closing up above that daily midline, which is above this previous low back here from August as well. So not the worst red candle, but I did expect a red day coming, because we have had a lot of green here recently. You can also look at the dollar. Massive green day here in the dollar. As you see, huge spike to the upside. Currently up almost 1% on the day, which is wild for the dollar. If you do zoom out, as you can see, bouncing off a fairly significant level back here. Turning to the 10-year yield. Big green day here in the 10-year yield as well, getting a bounce off that midline. Still red on the week, but getting a nice bounce. So when you do have the 10-year yield getting a big move to the upside and the dollar getting a big move to the upside, you do expect the stock market to get hit. So yeah, inflation data coming in hotter than expected for the third straight month. That should do it for this video. Appreciate y'all watching, and I will talk to y'all later.